Hi, my name is Sarah DiCrescenzo, and I'm a senior editor with Xconomy, the life science news publication. And we're here today at Biotech Showcase. And right now I'm going to chat with Jennifer and John from Silicon Valley Bank. And I'll have each of them introduce themselves, and then we'll talk a bit about what they've seen at the conference and what that tells us about life sciences in 2020. John, would you like to take it away?
Sure, yeah. John Norris, I'm a managing director at Silicon Valley Bank. I've been at the bank since 2006. I manage our venture capital relationships on the healthcare side, and then I write a report that comes out twice a year that really dives in deep into healthcare venture and what's going on, looking at the investment trends, how much money's raised, where are they putting that money, and also looking specifically at exits, M&A and IPOs of venture-backed companies and seeing what's happened in the world.
Great, and I'm Jennifer Friel Goldstein. I run business development at Silicon Valley Bank across healthcare and technology. I work very closely with John and his team that manage the VC relationships on behalf of the bank. And I've been in healthcare for 20 years, so this conference is always near and dear to my heart every year.
Great, well, John, let's start with you. You're just coming off doing your latest report, so your head is full of data about what we saw in 2019. So tell us a bit, just to give us a little insight into what happened last year and what you've seen at the conference and what it tells us about 2020.
Yeah, the last 2 years, when you really think about dollars invested in the companies, been record numbers. 2018 was a record, 2019 was close to that number. But really the story for biotech specifically has been in terms of exits. You know, IPOs continue to be very solid. Not only the number of IPOs, but the performance in the aftermarket has been great. And when you think about investors, you know, obviously the IPO is just a financing event. They have a lockup and they try and get out of those companies. So to see such great performance in the aftermarket has been really exceptional. And then right, maybe on top of that, the companies that have gone public over the last couple of years, we're starting to see them have data that comes out that the big guys like and get acquired. So we had 5 companies that IPO'd since 2015 that were acquired in 2019, and that total deal value was over $13.4 billion. So great numbers out there, but you know, with all of that as sort of a setup for the 2020 JP Morgan conference and the Biotech Showcase, we haven't seen a lot of deal flow or news coming out so far this year. So that's been one thing that's kind of interesting to me.
So it's been a bit quieter.
Yeah, definitely.
So does that tell you something about what we might see this year?
No, I think people are continuing to be very optimistic coming into this year. Again, we're coming off of a year of a lot of good IPOs, and frankly, the pre-money valuations for those IPOs are at a record number. So people are valuing those companies, you're seeing good performance in the aftermarket. I just think it's quiet for some reason. Yeah, I'm not quite sure what the answer is, but I'm really excited. I think it's going to be another good year, at least in the first half of the year, for IPOs and M&A.
Jennifer, what have you been seeing? What have you been hearing?
Yeah, I mean, we definitely physically noticed there are less people in town this year for the conference, but I would say the enthusiasm is still very much there. I mean, we are meeting with companies that have deals in the works that haven't been announced yet. Still, through our SVB Leerink partnership, we obviously have sort of an inside view into the pipeline of companies that are looking to get out, and it's a really healthy pipeline. And through our client base, which is a pretty special vantage point for us, we get to see the financings and learn about the new companies that are coming online. It is still really busy, so we haven't seen a slowdown. I think the sentiment here has been one of optimism, but not unbridled optimism, is maybe the best way to summarize it. So we're at a really healthy, steady state, I think, of growth coming off the last 2 amazing years. And people feel pretty comfortable and confident about 2020 investing and exit activity.
So with those really record high valuations, we had a lot of talk in 2019 about a potential bubble, perhaps a little hype. How does that compare to the conversations you've been hearing this year?
Yeah, I'm happy to take a first stab at this, John, and then dive in. I think people were worried about 2019 and it couldn't possibly continue on the high that we saw in 2018, but it did. And people are now feeling more comfortable with the rational business fundamentals that are behind a lot of the really good companies we've seen get out or get exited. And so that comfort level with business fundamentals, I mean, we have a tried and true playbook in healthcare, and people seem to be embracing that model and excited to continue to invest in companies that are highlighting those really solid business fundamentals.
Yeah, and I think just to build off of that, when you do look at performance, I mean, the performance is there. You know, these companies are going public and they're doing really well, they're getting acquired, and even in the private M&A, the upfront and the total deal value are sort of records over the last 2 or 3 years in terms of what that number looks like. So overall, performance is good, and it's kind of substantiating the valuations that we're seeing out there. But I do think it's a little bit more bifurcated when you think about valuations for biopharma specifically. You're seeing a lot of these really big Series A deals, and because they're so big and the investors are trying to get their specific ownership, valuations have swelled in that area. But when you look at on the smaller deal side, we're still seeing a lot of activity there with entrepreneurs raising $5 to $8 to $10 million in Series A, and the valuations there seem actually pretty stable. So overall, when you think about, is there a bubble? I don't think so. Is it a little bit frothy, especially for the big deals? Yes, but it's being substantiated in the public market with performance.
Yeah. One other really nice thing for us is we tend to think about this week being a big focus on biotech, which of course it is, but the really solid performance we saw in medical device and tools and diagnostics, even digital health, the ecosystem feels like it's in a pretty healthy, balanced place right now across all the sectors that we focus on, at least.
Yep. When you do look at, it was a year of the IPO across all those sectors. We saw, excellent performance by companies, and we're seeing these companies that are raising money at $2 or $3 billion valuations in the public market, which is really unheard of for, your traditional healthcare company that was just doing a financing event. So, things are looking really good.
All right. Well, thank you both so much for your time.
Absolutely.
I'm sure we'll chat again in 2020.
Looking forward to it.
Thanks.